What's going on, you guys? Welcome back to the channel. So in this video today, we're going to be talking about how to interpret financial documents for an investment using the commission-free trading app known as Moomoo. So I've been working with the Moomoo team over on my blog, investingsimple.com, over the last 6 months, and they approached me about sponsoring a couple of videos over here on the channel. So this video here is sponsored by Moomoo. It's a I've been working with for a while that I definitely trust, so totally happy to bring them on the channel here and talk about interpreting company financial documents. So that being said, guys, let's jump right into the video. Real quick, guys, I just have a few disclaimers here. Number one, I am not a financial advisor. This is not any sort of financial advice, and you should always do your own due diligence and research above and beyond any information covered in this video, which is for entertainment purposes only. Also, guys, I've mentioned this in pretty much every video lately, but watch out for those spam and scam comments down below. I'm never going to ask you to send me money or contact me on WhatsApp or anything like that. If you see any comments from me down below, make sure they have that white check mark next to it and the accurate subscriber count. That way you know for sure that it is me and not a scammer. So what exactly are company financials? Company financials show relevant business activity and highlight recent performance, and they're basically broken down into 3 standard reports. Number 1 is the balance sheet, which in my opinion is the most important, and that's typically the one I spend most of my time looking at. Number 2 is the income statement, and number 3 is the cash flow statement. And pretty much in that order, guys, I find myself the balance sheet is the most useful. The income statement is sort of in the middle, and for me, the cash flow statement doesn't provide much value to me in terms of the research. So if you're going to learn any of these, in my opinion, learning how to interpret a company balance sheet is one of the best research skills that an investor could have. So the balance sheet provides an overview of assets, liabilities, and stockholders' equity as a snapshot in time, and this is going to be coming out on a quarterly basis. So publicly traded companies are required to report earnings every single quarter, and in that reporting, they're also providing an updated balance sheet, income statement, and cash flow statement. So when we're saying a snapshot in time, that could, for example, be quarter 1 of 2021, could be that given snapshot of time, and that is where that balance sheet and those other documents are referencing back to. Now, over on Moomoo, you can access this at the snap of a fingers. All you have to do is select the stock, click on financial, click on statements, and then balance sheet, and it's going to be right there in front of you in the app. I'm going to show you guys at the end in a live demo how to actually do this yourself, so don't worry about those instructions for now. The balance sheet highlights how assets are being funded, whether through debt or equity, and there's many important metrics to look at, such as cash, current liabilities, and receivables. And one of my favorite things to look at on the balance sheet is that asset to debt ratio, and I also like to consider what type of debt this company has. Is it more current liabilities or short-term debt, or is this long-term debt that doesn't necessarily have to be paid back in the next 12 months? These are all very useful pieces of information that you're able to gain by interpreting a company balance sheet. Now, the income statement, on the other hand, highlights a company's revenues and expenses during a particular period of time. So, like we said, for example, that might be quarter 1 of 2021, which is the case here, looking at the income statement on the right for Tesla. The income statement is viewed the same exact way. You click on financial, click on statements, and then select income statement. And what you want to be looking for here in general is growing revenues, decreasing operating expenses, and reducing debt. These are all typically good signs of growth. So if you're looking to understand how fast revenue is growing for a company, year over year or quarter over quarter, you're going to find that information over on the income statement. But equally as important as revenue is the cost of revenue, aka how much money they're spending to go out there and make that money. And if you're seeing, the cost of that revenue growing faster than the revenue growth, that is something that you just do not want to see. So those are also both very important factors and things to consider when looking at the income statement. And that cost of revenue, or how much they're spending on going out there and getting that business, is referred to as operating expenses. So that is what you're going to see when looking at the income statement. So if operating expenses are growing at a faster rate than revenue, that would be a bad sign. Now, the last one here, the cash flow statement, this measures how well a company generates cash to pay its debt obligations, fund its operating expenses, as well as fund different investments. And again, it's viewed the same way. You click on financial, click on statements, and then you click on the cash flow statement. It's important to analyze cash flow statements in conjunction with the income statement because these basically work together to paint a bigger picture. The cash flow statement provides a summary of cash inflows and outflows of a company. So if you want to follow the path of money coming in and money going out, that's all going to be shown through that cash flow statement. And cash flows can be positive while net income is negative. So that is another tricky thing there to look out for. There's a lot of creative accounting that goes on here with financial documents, and you also run into GAAP versus non-GAAP figures, and GAAP is the generally accepted accounting principles. So if you're using different numbers as comparison metrics, you would always want to compare, GAAP numbers to GAAP numbers or non-GAAP numbers to other non-GAAP numbers. But I always follow the GAAP numbers, the generally accepted accounting principles that are basically enforced by the SEC and other regulatory agencies. So right off the bat here, what exactly is Moomoo? So this is an advanced trading platform that obviously offers access to commission-free trading, but it's available to stocks as well as options and ETFs. Now, Moomoo is based in the Silicon Valley in California. However, Moomoo Inc. is an indirect, wholly owned subsidiary of a larger parent company based out of China called Futu Holdings Limited. Now, despite the fact that they are based out of China, that parent company, this is still an SEC registered broker-dealer that is a member of FINRA and SIPC. So in layman's terms, what that means is that Moomoo has the same exact regulation as any other here operating in the United States. Now, as far as the reason behind why people choose Moomoo, well, it typically comes down to the features, because at the end of the day, commission-free trading is available everywhere now, and that's not really much of a differentiating factor. But beyond that, there's a few things that Moomoo does offer. First of all, free level 2 market data and real-time quotes. And I actually just did a video talking about this level 2 market data over on Moomoo and how you can use it to your advantage as an investor. So I'll put that video card up in the corner for you guys to check out at the end. Beyond that, they also offer advanced charting and research tools, customizable dashboards, stocks, ETFs, options, as well as a free stock incentive at the sign-up. So basically, guys, if you want to check out Moomoo and get a ton of free stocks in the process, pretty much all you have to do is open up an account and put a very small amount of money in there, and they're pretty much just going to hand you a bunch of free stocks. I ended up getting a few free stocks myself. I'll show you guys at the very end here, but basically, if you want some free stocks, feel free to use that sponsored link down below. That is not an affiliate link, so I'm not earning any commission if you use that. But if you are trying to get all of those free stocks, make sure you use that sponsored link down below for Moomoo. So the question becomes, using these financial statements, what exactly are the key indicators to look for? Well, I'm going to give you a few here right off the bat, and these are some of my favorites. First of all, earnings per share tells you how much the company earns in profit per share. So for every share that you own, that is your corresponding amount of earnings based on the total earnings of the company. Beyond that, return on equity is another good metric to look at, as well as return on assets. The current ratio is very helpful too to determine if the company is going to be in a bit of a cash crisis, because the current ratio shows you the current assets divided by current liabilities, and that simply means the amount of money that they have in cash or readily convertible to cash in the next month compared to the debt obligations that they have to pay back in the next 12 months. So for example here, if a company had $1 million of current assets and then $1.2 million of current liabilities, they wouldn't at this point in time even have enough money for those debts that are going to come due later on sometime in the next 12 months. So looking at that current ratio is a really good metric to understand if there's going to be any cash constraints on this company in the next 12 months. After that, looking at net margin, which is simply taking your net profit divided by total revenue. That's another great indicator to be able to understand, but there's hundreds and hundreds more above and beyond that. And what I recommend doing here, guys, instead of trying to learn all of these at once, you start with one, you do more research on what that indicator is, and then you look at different companies out there. If you want, you can use Moomoo. That way you don't have to change between different apps. And then once you fully understand one of these key indicators, then you build upon that and you add another indicator. However, I do have to warn you here, guys, be careful of going into too much detail because there is such thing as that analysis paralysis, where if you're simply looking at too much information, a lot of it is going to contradict other information, and you might just get totally scrambled and end up making no decisions whatsoever. So don't overdo it, guys, but again, find that fine line there of doing enough research where you can make your decision, but don't go too far into it to where you contradict yourself and you get that analysis paralysis. So overall, these indicators provide you with a glimpse into the company's financial health. A good key indicator should be taken with a grain of salt. For example, tech companies typically feature higher debt. Established companies typically have more consistent cash flows. So there's different traits or characteristics of different types of stocks out there. For example, they're looking at tech or growth stocks versus more blue chip or value stocks. Key indicators are often used to compare companies within the same sector. So, for example, if you're looking at the PE ratio, that is something where you would compare the PE ratio of two companies within the same sector or industry. So basically, comparing a company like ExxonMobil and Facebook makes absolutely no sense. There's totally different ways that those businesses are being valued. Facebook is being valued a lot based off of their DAU and MAU and their active users, right? ExxonMobil is being valued based on so many other factors, gas stations or distribution channels. It's not a fair comparison, and it's not a useful comparison to look at the PE of ExxonMobil compared to Facebook. Now, on the other side of the coin, it would make sense to compare the PE ratio of Facebook to Twitter and Twitter to Snapchat, just the same as it would make sense to compare the PE ratio of ExxonMobil to Chevron and Chevron to BP, but you just don't mix the two and compare PE ratios or many other key indicators between completely different sectors or industries. Now, Moomoo makes this incredibly easy with the stock compare feature. So more on the stock compare feature here, guys. Let's take a look with Tesla, all right? So stock compare can be found by visiting the financial tab, moving over to indicators, and then clicking on stock compare. And this is going to allow you to quickly compare indicators among 2 to 3 different companies that you add yourself. So for example, we created this comparison here looking at Tesla versus Toyota Motors. Tesla currently has a net margin of 4.47%, while Toyota has a net margin of 8.39%. So what exactly does this mean? Well, that means that for every dollar of revenue, Tesla earns about 4.47 cents. Meanwhile, Toyota earns just about double, somewhere around there, maybe not quite double, at 8.39 cents. So you could look at that and create a comparison chart, and if you wanted to, you could throw another automaker in there, maybe Ford, and then straight across the line, you can look at return on equity, return on assets, gross margin, debt to asset ratio, net margin, and just be able to look at it very quickly, set up comparisons, and basically do tons of research in a very short consolidated period of time. So now, guys, we're going to jump into the actual Moomoo app on my phone and research some financial documents of one of my favorite stocks right now that I own, which is Genius Brands. Okay guys, so here we are inside of the Moomoo app now, and what we're going to be doing is interpreting some financial documents of one of the companies within my portfolio. Now, obviously guys, looking at the app here, there's tons of different features to Moomoo, and a lot of them are going to be above and beyond the scope of what we cover here, but I am going to be posting a full review of Moomoo soon, and once that video is up, I'll go back and put the card in the corner here. So if that's in the corner there, you might want to check that out at the end just to get a general idea of all of the different features available here on Moomoo. But that being said, guys, let's jump into one of my stocks here in this portfolio, which is Genius Brands International, and we're going to take a look at the underlying financial. And of course, in order to get to those financial documents, you have to scroll all the way here over to financials. This is where we're going to get the bulk of our information researching this company. Now, there's a lot of different things in here that you can look at, guys, in terms of different indicators, revenue composition, where their money is coming from, all kinds of stuff like that, earnings per share, financial estimates, etc., etc. It also shows you line charts showing the trends on the balance sheet, the cash flow statement, and the income statement and how they are changing. But in particular here, guys, this is what we're curious about, is those actual statements. So if you want to view those, you click on the statements button and then you click details next to the statement that you're looking to view. So in this case here, we're going to start off by looking at the income statement for Genius Brands. Now, right off the bat here, guys, this is the number one concern among investors, is that Genius Brands right now is simply not focused on revenue because they're building out a children's cartoon app and they're basically investing a ton of money into content for that. So right now, revenue is negligible and there's not much to speak of. Whereas in quarter one of 2021, they had about $1.06 million of revenue. However, the year-over-year growth is 217.94%. Now, again, we talked about that cost of revenue being something that you have to watch out for. You don't want to see that growing faster than total revenue. We only saw a cost of revenue increase by 9.21%. Meanwhile, total revenue increased over 200. So that, in my opinion, is a good sign. Next, we'll jump over to the balance sheet and take a look at what's going on here. So this is one of my favorite reasons for investing in Genius Brands, is because it is an absolute cash cow. Believe it or not, right now, Genius Brands is sitting on $143.61 million cash in the bank, using that money to buy media assets and just do things to grow the overall business. So right now, they're sitting on a mountain of cash with minimal debt, which is something I like to see with my investments. So overall here, looking at the metrics, guys, we see cash and cash equivalents, but I want to scroll down and show you the debts just to give you a general idea. So total assets for this company comes in at $205.79 million, but if we scroll down, total debts or total liabilities are just $30 million. So this company has more than $6 in the bank for every dollar of debt that they have, and that is something I like to see in my investments. This is similar to like Google or Facebook or some of these other cash cow companies. The difference being those are close to $1 trillion companies, and this is being valued at $500 million right now. So there's a lot more to Genius Brands, guys. Don't just buy it based on the balance sheet. Do your own research. Watch some of my videos about it if you're interested. I'm just strictly using this for, demonstration purposes of what we're looking for within these financial documents. So that's typically what I look for there, is total assets, total debt. Do they have a lot more assets than debt? Yes, they do. That's a good sign to me. So then we're going to lastly jump over and take a look at the cash flow statement. Now, I very rarely even look at this here, guys, but I am just going to show you a general idea of what you have here available to you. This is the financial document that I have the least knowledge of, and I just simply don't use it that often, but this is where you would navigate to if you want to interpret that cash flow statement. So the last thing we're going to do here, guys, I'm going to go ahead and purchase some shares of Genius Brands just to give you guys a tutorial on how to buy stocks with the Moomoo app. But before we do that, we're going to sell off one of the free shares that I got earlier when I opened up my account. So if we jump over to the trade tab and we refresh this, we can see that I have 1 share of SiriusXM Holdings. I did have 1 share of Celestica, but I ended up selling that in one of the other videos that I did here for demonstration purposes. So right off the bat, let's click on SiriusXM Holdings, and we're going to go ahead and trade, and then we're going to sell our share here of that. So we got to make this a market order so it fills immediately, and we're going to sell 1 share. It's a day order. We're going to click the sell button, and just like that, we have sold Sirius at 6.48 cents. So now it's going to take a few days for those funds to be available to withdraw or reinvest. But what I'm going to do now is purchase some more shares of Genius Brands for demonstration purposes to show you how to use the app. So what we're going to do here, since it's already in my portfolio, I can click on it. But if you didn't have it there, you'd go to the search bar and you would type in the symbol. So it's going to be GNUS for Genius Brands International. Now what we're going to do is we're going to click on the trade button, and then we're going to do a market order to be filled at the market price. Now looking at the bid and the ask price, it's falling between $1.66 and $1.67, which is a spread of 1 cent. So I'm fine with that. I'm not going to worry too much about doing a limit order, but if you wanted to, you certainly could do that. So we're doing a market order on GNUS, and we're going to pretty much purchase as much as possible, which would be 94 shares. So doing this with 94 shares, that's going to use up the remaining cash in my account, but it's also not going to be put me into margin. You can see right there where it shows you where you would be potentially going into margin and borrowing money to buy it if you were looking to buy more shares. However, as far as I know, stocks under $4 per share, I don't believe you can actually even margin against them. But that being said, guys, there's the order, 94 shares. We click on the blue buy button, and actually it said this action failed. It must be because of the price change. So yeah, we have to lower that and just simply do 93 shares. The order was submitted, and just like that, we bought 92 shares at 166.5 cents. So now, guys, if you look at my total portfolio here, it still does show Celestica and SiriusXM. That is because it takes 3 business days or 3 trading days for that trade to actually settle before the cash is available for withdrawal or reinvestment. So that's why those are still showing right there. And I have 258 shares of Genius Brands at a cost basis of 168. That is my total investment here within this portfolio. So anyways, guys, that is going to wrap up this video. That is how you can research important financial documents and how to use Moomoo if you want to do it all within one easy-to-use, commission-free investing app. As mentioned, it might be a little bit more going on than a complete beginner might want, but if you have been trading for a while and you're looking for a brokerage that simply just has more to offer, Moomoo is a great option to consider. As mentioned earlier, if you want to get those free stocks, use that sponsored link down below. It's not an affiliate link, so I don't get any kind of kickback from it. But if you want to make sure that you get the most possible free stocks, you're going to want to use that link down below. But anyways, guys, thanks so much for tuning in. I hope you enjoyed this video. If you did, make sure you drop a like, subscribe, hit that bell for future notifications, and as always, guys, I hope to see you in the next video.